This is Dan Max, CDXP Realty, aka the Trading Agent, your live market chat for, was it Monday, October 16th, 2023. Hopefully you're having a great weekend. Want to do a live chat again, just open up questions. Little surprised we're bounced, but are we really? Again, going into OPEX, going on what we know. I mean, it's never going to be easy, you know? So at this point, people who have not, you're newer to the channel, please check out the YouTube channels that we put, or not YouTube channel, the videos. Options expiration, it's a great one. Again, there's actually two other ones too that go a little deeper into it, and I promise you, it's well worth it. It's well worth it because there's a lot to talk about. Because again, we can talk about options expiration. Again, remember the goal is to kill the VIX. It's going to be up one part of the week, down part of one of the week. Typically, there's tops, bottoms, reversal points, in times during such, and so I don't know. I just try to keep it simple, you know. Again, assume at this point the narratives are going to be trying to trick you. Because again, I wasn't trying to be mean to some people in the Discord room, but it's like you literally just described to me the exact narrative of what everyone wants to believe, that this is a cup and handle and that we're going higher and that the buybacks are going to take in a big effect. And I've said this a million times. The dot-com bubble, they announced big buybacks. In 2000s, they announced big buybacks. Companies basically wasted billions of dollars on buying back their stock when they needed to invest in what? Growth for the future. And then the market did not reward them for such. Does this make sense? They got to actually penalize because, again, when you spend $70 billion on a buyback, what does that get you when you buy back the stock? Does it give you growth? Does it allow you guys, the company to grow, invest in the future? No. Great during a bull market, right? Everyone loves it. But as soon as things get difficult and everyone sees slower growth, slower economy, that buyback, great. It might reduce the float. I mean, we know what it's going to do, but it's taking money also away from the possibility of what? Buying companies, future growth. They're going to have to borrow money. Interest rates are not cheap for tech companies now. It's a totally different environment. Companies were okay with it because they're actually borrowing money at cheap rates to buy back stock and buy companies. Now you can't do it. So I don't know. Just any questions, thoughts, concern? Thoughts, questions, concerns? Sorry, reading a text. I know a lot of folks who are just, again, they're newer to the channel, they're newer to trading, and they just go, well, it's a green day, so the trend is up, and it's a red day, the trend is down, and it's like, please, for the love of God, zoom out. Please, 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 please. Does that make sense? I mean, it's always amazing, because then Eric did a great job, and H said, yeah, there was a cup and handle in Apple in 2008. Like all these companies, again, and I say this all the time, like off the top, off the lows, there's going to be some sort of higher low, retest, choppy, head and shoulders, all sorts of fun stuff. Right? Right? Remember that? You guys remember that, right? Yeah, okay, thank you. And so expect that. And so, again, you want to create a picture. Everyone can argue, oh, this is a cup and handle. Is it? What if it's a double top? What if these are lower highs? What if this is just like a fake breakout? And once you get back under for Apple, like 170, it's over, right? Please zoom out. Like you can argue for anything. And again, I would argue the Feds, exactly what I said in this, the buyback's great. I don't give a shit. Problem is the Feds are trying to raise rates as fast as possible to slow down inflation. They're trying to reduce their balance sheet literally as fast as possible so that when they do decide that they can open it up again, they have bullets to fire. You have a global recession upon us. Again, if it wasn't for war, the economies would be falling apart. We all know this. You know, the affordability is insane. Like wages are not going up. We're stuck in what I call a silent recession. And again, can they kick the recession down the road by spending money on war? I guess. But again, at some point, it's going to have a mental effect on a lot of companies. And it is. It absolutely not an offense, but on the consumer. Let's just go there. Let's take it there. So sipping on a smoothie. You know. Stagflation on salary wages. I mean, again, if you can get a new job and someone will hire you, yes, you're getting wages. But for the average person who is a high earner, companies are trying to cut. The middle class, lower class, again, they don't have the ability to float, right? Right? It's just part of kind of what it is. Oh, got some questions coming in. Tech bouncing a bit. Thinking it's just a little bit up after a big down Friday. Maybe up first half of the week for ChopX. First spot type of thing as well. I mean, the highs are already in. Again, I try to explain this to people. And again, this doesn't necessarily reference you, Jason, but in general, like channel high hit. First dip. Yeah, I mean, 150-day cross, I guess. Yeah, I mean, this is the thing that's so hard to exact. And this is the thing, like if this was an intraday candle or a chart on a 10-minute, people wouldn't care. They go, oh, bigger volume going down, little bounce, okay, whatever. And then 10 minutes later, they'd flip around and they wouldn't look. So, does this make sense? And so at this point, yeah, I mean, it probably is. And this is the thing about OPEX, right? We got the VIX in the 17s. I mean, how low can they get it? I mean, that ultimately becomes a question of what's going on. I don't know. We got the 200-day, 20-day. I mean, could we get back down to this 1587? I mean, it's all possible, right? It's all possible. Just be thoughtful, right? OPEX, ChopEx, they're going to try to knock some things out. But also, too, usually inflection points. So, getting a phone call. Thoughts on consumer staples? Give me an example of one. Because, again, all consumer staples, I mean, people try to look for safety in consumer staples during big blowouts, and they're not safe. It's just pieces of paper. It's all liquidity. Does that make sense? KO specifically? Well, first of all, that's the Buffett special. That thing doesn't go anywhere. And he loves selling covered calls. So buying the stock, you're kind of at the mercy of what Buffett wants to do. If that makes sense. So just keep that in mind. I mean, based on what I'm seeing, everyone keeps talking about those drugs that are helping fat people not snack and drink Coca-Cola and all that stuff. I mean, argue what you want. That's just a big fucking top. Excuse my language. A big chop top. And if you really want to buy it, you probably buy it when the market's done dropping. Until then, you don't know. I mean, I don't trust consumer staples like this. And again, Buffett's probably selling covered calls. Now, it dropped pretty quickly, 63 down to 53. Worst case, due to flop. But I wouldn't hold on to Coke like it's something safe. I mean, there's no safety. I try to explain this. There's no safety. When the mutual fund year ends, yearly profits are being calculated for bonuses. When everything comes to shit, everything gets sold. It doesn't matter. Safe, not safe, whatever. Looking for a short-term options call to play out. Why would you buy January options for a short-term call? Like, that makes no sense. Why would you buy that much time for a short-term bounce? If it doesn't happen like within a week or two, just get the fuck out. And again, RSI does not predict news. It just follows price action. So I just don't understand. Well, again, this is why I always kind of make fun of RSI. It literally follows the price. It doesn't predict it. You can have 17 divergences. I've seen trends where the RSI is trending down and the stock just keeps going up, 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 up. I've seen trends where the RSI looks like it's bottoming and the stock just goes down, 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 down. It's literally one of the most, and if people really understood where the RSI was created and what it was used for, they'd absolutely be like, I will never use it again. They would never use it again. Literally, it's an indicator that was created by brokerages to convince them that they can somehow control, like they can predict price action. It's a joke. It just follows the price. It's like 99% of the indicators, they just follow price. They don't tell you anything about the price action, and they can't predict the news, and they can't predict what the hell is going to happen. They just follow the price action. So if you want another confirmation of price action, yeah, I mean, you can put the RSI up in there. It's an absolute joke. Yeah, it lags. It looks backwards. Yeah, I mean, that's just the truth. And again, I'm not trying to pick on you because there's a lot of people who go, oh, what do you think about RSI? And I'm like, dude, we started looking at in the early 2000s, late 90s. Once you back test it and you live with it, you go, ooh. So, I don't know. So, again, I'm sorry. I'm just text. Someone's trying to call me important, you know. I go, it's like, oh, I can't answer. But this is the thing. Like, why would you play a long position in Coke? Like, ask yourself, what are the best trades out there? January calls. Now, remember, all capital is equal. It has to be respected. And this is where I always try to explain to people, like, if this is the best trade out there, sell me on it. Because I would look at this and go, this is a waste of fucking time. If you want to watch paint dry, grass grow, make $1, hope it bounces to 55, I guess. But if the market's trending down, you got to be careful of playing up trades. I mean, you can tactically trade them, and no one says you can't do that. Hedge at times, I said that, you know. But buying Coca, like, again, consumer staples are not safe. Go back and look at the history. I mean, even in COVID crash, they're not safe. Go back to 2008, 2009. I mean, here's the .com bubble. They peaked then too. Here's 2008. Did Coke, consumer staples hold up? No, they fucking didn't. I'm telling you, it doesn't work like that. They're just pieces of paper. So, again, I don't know the narrative of your belief that it's time to buy Coke other than RSI oversold. But again, that's such weak cheddar. Like, that's just like a mindset of, all right, well, it's oversold, so it has to bounce. Okay, I mean, no one's going to argue that. But why not just look for trades of things that have already bounced and then short the shit out of them? That's what I would look at. FedEx. Again, we smashed this one. I took profits on Friday. It was like, all right, looking for a bounce. OPEX, 100-day. Wait for it. Caterpillar, 20-day. Easy. Maybe the 50-day if you're lucky. Let it play out, right? I mean, pull up your favorite stocks. Apple, I mean, again, 180, whatever. That's not really much of one. But, like, again, when Apple got the big I mean, everyone knows the phones aren't going to sell well. Any pop fills the gap. I mean, maybe it comes back. I don't know. But these are just such easier trades. And, again, I'm not picking on you, man. This is just a mindset thing that I tell people. I'm like, why do the hard things? It's like golf. Just get it on the green and put it in. Right? Don't take big risk where you lose big. And pick your favorite name. We talked about JP Morgan. Any pop on this motherfucker. Excuse my language. Look at this candle. Look at this candle. That is basically an arrow pointing down with huge volume. I mean, you literally can't paint it any clearer. Now, again, that's why I said look for bounces. Maybe OPEX. Does this make sense? Remember, your capital, if you're putting it at risk because of RSI or because of oversold conditions, why not just wait for the bounce to short the shit out of things versus trying to go long things that aren't going to move? Consumer staples are not safe. They are not safe at all. Now, maybe oversold again. Like, that's, I hate playing the perspective of what define oversold, overbought. Because as someone who's been trading for 20 plus years, I've seen things go further than they should, up and down. Think about NVIDIA, overbought. Heard it was overbought at 350 after it went from 180. Well, what did it get to? Exactly. What did it get to, mid fives or whatever? Something stupid like that? No, sorry, just low fives. Right? I mean, could we put... Can I draw? Where is RSI on this son of a bitch? I'm just curious to see what it looks like. Studies. I mean, oh god. Let's do normal RSI. Apply. Oh no, can't do it. I used to have it on here as a joke, so I could just kind of look at it. But this is the thing. Like, I can imagine the RSI was doing this. And the stock just going higher, 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 higher. Any other thoughts, questions? Again, I mean, this is a good, I mean, again, I'm not picking on you, Polish Miss. I'm just like, this is the stuff like I've learned over decades teaching people. Same thing, like make it simple, keep it simple. Speaking of NVIDIA, is this not a head and shoulders top? I mean, huge upgrades last week. Price targets, 800, 900, 1,000. Talking about their earnings are going to explode. And it's like, interesting. The reaction, it gets right up into what? This level in Kapow. Kapowski. Kelly Kapowski. So at this point, what do you do? Do you want to go long during OPEX, or do you want to wait for things to certain hit levels and just short the crap out of them? And buying January calls on Coke, that doesn't sound like a short-term play. I don't think that's short-term at all, unless I'm just don't understand the definition of short-term. To me, short-term would be like a week or two out. Not a whole quarter. Again, Apple, I mean, lower highs, lower lows, 100-day. Pick your favorite name, right? Pick your favorite name. Do for some bouncy bounce. Again, with the market, look at this mirror. We'll just run through the market real quick. Again, if you have thoughts, questions, please interrupt me. I don't mind at all. SPY gets back over the 20-day. Chopping around, getting stuck in this level. All right. Not surprised. I mean, you had some quick distribution, market makers trying to, what did we say? Sharp up in a bear market move is what? Going to get sold at some point. Sold at some point. Makes sense? Whew. XLF, what did we say? Get up into this upper 33s, right? Okay. Here, I mean, it's Dran. It's been Dran. You got Bank of America tomorrow. Good luck with that. Goldman, J&J earnings. I mean, there's a lot going on, but there's also not, if that makes sense with OPEX. Like, just let things come to you. If you took some profits at the end of last week, that's what you doled it. Okay, so I sold it for 20% gain in a week. I'll wait. 10,000K, I'll take it. My scale is larger, so safe data options is what I look at. Swing options. Again, everything you're saying, I understand. Trust me, I know all the option strategies. I mean, take your money. Good, that's cool. 20% gain. If you're going huge in options, I would just, again, I don't know why you would go against the trend, potentially. That's my biggest fear, is that if you go big, and now maybe if you want to sell puts, I get that. Collect premium. But buying calls, like that seems fucking stupid. Because if you have that kind of capital, you shouldn't be buying options. You should be selling calls, in my opinion, or puts. Do the Buffett methods. My thought was the action today was bearish, but it's still rallying, so it would be the first dip gets bought. Explains why I saw it my own way. Or Shannon, it's just a Monday on OPEX, and they're going to hold it up Monday, Tuesday. Maybe even to Wednesday. I don't know. That's my opinion on it. I mean, it could be choppy too. And keep in mind, individual names are going to do their own different things. All right? Like look at Apple versus, and say Tesla versus say like Microsoft or Google. It's going to be like that. Yeah, I mean, that's the thing about OPEX. Like there's pin action, right? There's going to be all sorts of stuff. Like it's just not easy. But I would just caution people, again, if you're going long, like you don't need a long period of time frame. I mean, I wouldn't trust it. I mean, here we go. It's very like down, 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 chop, chop, chop. Down, 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 chop, chop, chop. Lasted to the end of the month. Now we talk about the first and last 3 business days, and option expirations can be tops. Trend inflection points time-wise. Well, here you go. I mean, does it get to the 200? I don't know. Could. Absolutely could. Right? But man, yeah, if I had like the thinking, just buying calls versus selling options, when you've got more capital, definitely sell options all day. Do not limit yourself And then you can buy the options with the premium you sell against if you're really confident. But at this point, I don't know. Buying calls just, again, that just scares me when people really buy long dated calls out for a position that, yes, technically is oversold on paper. I don't know. It's just, I don't know if it bounces. Like, it's not a big mover. That's where selling the options would make sense to me. Like, if you want to, say you want to play a stock that moves, that has volatility, yeah, I get that. Right? But names like Coke, certain banks, certain stocks, they're all about selling options because they just range bound and they chop around. Like, that's what they're known for. I mean, there's literally certain stocks that they use, they call the printing press method, and they literally, market makers know, like, just the operators who own a lot of the stock, like Buffett can literally make little moves and get his little minions to like manage the stock zones. I mean, we talked about this with like Occidental for what seems like, again, he bought it. Don't you think he'd want to mark the price up? No, he is totally happy with this thing chopping between a big range, and he's just selling calls and puts and calls and puts and selling and selling and selling, hoping the stock goes nowhere, and then he can buy more stock because he'll like the company, right? Like, he probably believes in it, but selling more and just doing it over and over and over again. And it's like, look at this thing, right? Like, think about some of the other names that were moving better in the oil patch. Pumpkin patch. Does that make sense? Like, that's the thing about certain stocks, is they just don't go anywhere. And those names are exactly the names that people sell options on. They don't buy them on. I hope that makes sense. And again, not critical. It's just like, that's a very obvious thing to me. Let's look at housing. Just curious. Like, a little oversold. Yeah. The bonds. This is the bonds. You were like, oh, the yields are going lower. I'm like, I've said this for, it seems like weeks. Like, whatever the bottom might be, like, expect some volatility down here. Like, bonds are not going to go ripping up and get bought, in my opinion. Know your levels. You know, we thought even this would hold. I don't trust bonds from the sake of, like, again, if you want to buy them at this yield, I get it. But have a stop. But don't trust it like you have to hold these things. Just please don't, because again, I mean, what if inflation kicks back up again? I mean, there's so many things going on globally. Our debt, and my biggest beef with everything is that literally, why would anyone lend us money? We just spend it on war. I mean, people get mad that you say that, but that's like just, I mean, again, we're not building the economy. We're just building more of a war machine. We have infrastructure problems. We've got healthcare problems. We got so much stuff. Again, y'all know I'm not a political person, but it's like, man, it makes it very simple. Like, if I'm lending, like, if I don't like the United States, I'm not lending this money. That's why you had, and honestly, I think that was the biggest problem on Friday, is that bond auction. I think the 30-year, was it 30-year? I don't know. It was a 30-year bond or 20-year, but nobody. They couldn't sell a single bond. Cool, man. Cool. Again, that just trying to, like, my perspective on option stuff. Like, again, because again, everyone has their own little systems. And I know some people who are very risk averse in options and can do it. Like, I know people who buy stock and just, they'll literally just sell the cover calls in it, and they'll collect the 5-8% a month potentially on huge amounts of stock. And then again, maybe they have to buy them back then less than that, but then they own the stock and maybe the trend is up or down. So kabocha squash. What do I look for in the SPY? So when I look for intraday stuff, I always start on the 10-minute. Obviously, you go on the daily. Let me say this first. Zoom out first. Like, know where you're at. Clearly, there's resistance here, right? At the 437. Then I go, okay, well, let's go check the 10-minute. My favorite formations are always, I got to wait for 2 10-minute candles. I love left-right combos where you have big green, doji, then red. Here's a kind of a version of it, but you kind of wait for indecision and retest. And that's where, if you're worried about getting stopped out and they shoot through it, you just have to know that's always going to be part of the game. But here's the thing, and here's another left-right combo at the bottom here. If you don't know what a left-right combo is, let me know. Here's another one. Chop top. So either double tops, retests, left-right combos. I mean, they're everywhere. They're literally everywhere on the 10-minute. But it's a multi, and again, this is what I think people suck at, is they get on the 1 minute or the 5 minute, and they don't realize, like, it's going to get chopped. Like, again, they're not going to make it easy. If someone has stopping power, here's one, you're not going to unload all at once, because that would be stupid. You would try to unload quietly at the top, and then maybe it takes 10, 20 minutes, 30 minutes. And then they'll let it pull the rug on it. Then they'll let things happen. But again, in a trend, even intraday, there's like the inflection points are repeating patterns. Hope that makes sense. And so again, and here's the thing about intraday stuff is that this is why it's always harder to, like, again, as we say, like, if you're trading out of the mindset of that you can't be wrong, you're not trading through the probability lens and mindset, because that's just the nature of trading. Like, you don't know why the fuck it might spike up. Maybe it's something like some news. And here's an example. We've seen this before. Like, maybe there's some news that's waiting to come out. You and I don't know what it is, but somebody's sitting on it. And then the news comes out. They know what the price action is going to be. Then they unload into it. And that's why it's so hard intraday as well. And that's why I tell people, like, don't be surprised if the highs and the lows can come between, in the AM, right? In the AM, right? And then also, too, watch, like, how lunch hour is kind of drifting. It's kind of it can be incredibly difficult. But again, that's why they call it amateur hour. The first hour, and sometimes even, again, if you're Eastern Standard Time, even up to 10 a.m., you can see highs and lows for the day. And that's why if you're trading bigger positions and you want to trade around them, I argue, like, hey, if you got a position and it spikes in the morning, spikes in the afternoon, spikes down, maybe take some off and look. But I hope that helps. And here's, like, again, here you had the high in the morning, down at the lows by the afternoon. High in the morning, but could it chop around because of OPEX? That's the biggest, like, the hardest part here. Because if this was not options expiration, typically Monday and Fridays are harder than the Tuesday, Wednesday, Thursday continuation pattern. That's been more prevalent. But there's been down Fridays and down Mondays too. I mean, it's gotten shit. Then there was like up Monday for like 12 straight or whatever it was. But again, it's like once the pattern becomes known, that's where you got to be careful. Like, everyone knows this. So does the market makers. So does, like, the insiders. And I say insiders, people who are making big moves. Like they'll advertise like, oh, that's the move. Buy it every Friday, sell it on Monday. Only if it's that easy every day of every year or of every week. Any other thoughts, questions, concerns? Again, because I think this is the thing that's hard about the market is I think a lot of people, and they just don't see it. Like, they look at the weekly and they go, and again, we talked about the 1970s action was very similar. You had like a top, and then 1973 or 74, I can't remember exactly, you had a monster rally back. And then it was right back down to lows. And it was basically a decade of just nothingness. I wouldn't be surprised if that's what we're in. I don't think they can print their way out of this without losing complete credibility in the dollar, which I know for a fact. We'll go to the war for dollar. We have before. People don't realize that. Like, that's literally what we've always tried to do, petrodollar stuff, protect the petro, and we're losing that potential. Like, so do we really want to go stupid and destroy the dollar by acting like all the other BRIC countries? Probably not. I hope that helps. It's just, again, there's no right or wrong answer, like, for certain, right? We're playing probabilities, and that's just always the game. And the people that get it, I mean, I know Polish gets it, like, you're just playing probabilities. And everybody has their understanding of what their probabilities are. And just keep that in mind. That's all. Be thoughtful. Be thoughtful. You can be wrong. when things move more in your direction, the less you own, right? Manage your risk. If you have options, I always tell this people, like, so I had some FedEx options. I took them all off on Friday. Oops, that's the weekly. And now I'm looking for different options. I'm not, we bought, I think, the 265 puts. I mean, they got up to, I don't know, almost $20. We sold them a couple 100%. Well, do you think I'm going to buy the 260 puts again? No. I'm going to limit my risk. I'm going to be like, all right, what's the next $5 or $6 put somewhere around the 255, 250 area. So if that blows out and I'm wrong and it rips up, and then I'm not like sitting here crying that I didn't put any money in my pocket. Any questions, thoughts, concerns? Da-da-da-da-da. So at this point, if not, I will wrap it up. Oil seems to be hard to guess here. No, I don't think oil's that hard to guess, honestly. I think the hard part is trying to be correct on it short term. Because again, if it's going to be volatile based on what's going on in the Middle East, that to me is probably the hardest thing to try to base it upon. But I don't have any doubts that oil is heading lower in time. Demand destruction is real. But what do we know about what's going on in the Middle East, right? Like that's the $1 million question. So if it's hard because of that, I get that. But remember, we are at support here in the 80s. We talked about shorting at the highs, but now, I mean, this is why you trade around it. And it's like, if you really have to, I guess you can jump into it. But this is the thing. It's like with people, I'm just like, leave gold alone. And people are like, oh, you can't. No, do. Just do, you know. I don't know how to explain it. I'm getting like distracted. Like we talked about, like due to bounce. Okay, cool. I mean, is that all it's got? I don't know. I mean, we talked about this. It's like, sometimes trades just aren't set up for the easiest moment, like, and that's where I'd say, like, I would short oil on major pops. Let them come to you. Like, you don't need to sit there. I'm talking about hypothetically. Like, I don't need to sit there and wait for oil. I can set an alarm, and if it pops, then I just jump it, What do you think? Do you make of the bond versus market action today? Sizable move in yields, but market has ignored. I mean, I think it's OPEX. And again, I don't really think people care about bonds if they're in a range. I think people can get comfortable with rates at this point. That's all I can say. Yeah, Kabocha. I mean, that's the hardest thing. Like, and here's the easiest way to trade these things. Yeah. See you. Have a great day, Shannon. In my opinion, and this is how I've always said, like, we nailed the top in oil pretty good. Waited for it and thought OPEC would try to pump it. Let me get back to the USO. They didn't. They said, I thought they were going to cut again. They didn't. And so we didn't get a bounce. And it just went, well, we actually got like one day. I thought this would be a little shampoo head and shoulders, right? But, I mean, at this point, this is where it's hard when you take profit on a trend. And this is why Livermore would say, hold on to your winners. And that's where I feel like if you're shorting stuff and you have long-dated options and puts and you're shorting the stock and you're in the money, manage it, but don't give up your position completely. Because here's the one thing, like I said, for example, for FedEx, I'm like, where's good old UPS? You just don't know if it's going to turn into this. Or just goes, right? You don't know. So trade around it, manage it, do the best you can for the love of the best you can. That's all. That's why I like JP Morgan. Think about it. Like, this is like a big chop. And people argue this is going higher. And it's like, no, that candle says it's over. remember, they were beneficiaries of all the banking stuff, but they're nothing's safe. That's what I try to explain to people. Like, great, okay, well, if banking overall is declining a bunch, there's nothing safe about these guys. They're not going to be extending any loans to consumers. Remember, credit is tightening. It's great they're getting more deposits. Are they too big to fail? Of course, in my opinion, they are. Doesn't mean the stock can't get dropped 20 points. And if you buy some cheap options, $3 or $4, turn them into a $20 option. And if you get lucky and it does like, 160 down to 120, I mean, you're talking about risk well worth it. Well worth it. Because again, to me, this is like the pattern where it's like A to B, B to C, and here's your C to D leg. They call it Gartman patterns, but it's just a repeating pattern. And now off the top, we're chopping. Well, it got past earnings. Like, I'd rather play stocks that are through earnings than the ones that are not. I warn people that heavily because they might hold up into earnings. Like, that's the hardest thing here. And that's why sometimes I try to explain, like, earnings are in OPEX, right? You got you got a Tesla and Netflix on Wednesday. Like, could the market hold up into that? You never know. Right? Could Netflix, as much as you think this thing's going lower and it looks like shit, could it have a reprieve in front of? Could shorts be covering? Yes, absolutely. Right? Tesla, like, could it hold up and hold trend till then? Maybe. I mean, that's literally all this is a big consolidation pattern, and people are trying to short Tesla, and it made sense that couple days. But now, if you're going into earnings, like, unless the market absolutely implodes, which, I mean, again, that's always in your favor when you're short at this point, in my opinion, it could hold. It could just hold up. It could chop around, right? Somebody could upgrade it, JP Morgan, so they can unload more shares. You just don't know. That's why I just warn people with much aggression. Earnings, second mouse gets the cheese. No matter what you thought of JP Morgan's earnings, it doesn't fucking matter. Look at the reaction. If you played it beforehand, good luck. I mean, if it would have dumped, all right, you missed the trade. Move on to another one. This is such an opportunity. And then when you say, all right, well, you didn't get in on it Friday. Okay, well, yeah, I mean, I think it's going lower, but look for a bounce. And there it is. Maybe there's some more. Again, layer in. Keep it tight. Tighten your stops up. Know your risk reward. Whatever you want to find your risk. However you feel you manage it. Just do it. Just do it. All right? I'm trying to think of anything else. Anything else out there? Questions, thoughts, concerns? If not, I'll wrap it up. I appreciate everybody. Yeah, I think I'm going to get going if there's no other thoughts, concerns. Again, I'll check this out on Rumble, RUMBL. I guess I can't say, I don't know. I just love YouTube, but trying to share it on different platforms. Not everybody uses the tube. All right. Well, on that note, you guys have a amazing, blessed day. If you have any questions, you know where to find me. I appreciate the love, support. I'm going through some tough times, as y'all know. Things are just what they are. And yeah, have a great day. I'll see you for the nightly or daily market recap later. Peace.